Welcome back to another Stock Market Open live stream. Today we have Bounce Back Monday. Bounce Back Monday begins with the exception of for Ethereum, but that one has kind of been a little stuck in the mud for a while. I feel like it's been a little unfortunate. It's actually underperformed Bitcoin by quite a bit over the since its peak. Really has some supply-related concerns here. But today is September 9th, which means we really don't have much in the way of catalysts. We have wholesale inventories month over month and trade sales month over month, but those come out at 7 a.m. Tomorrow, we'll get small business optimism, which is basically not something the market really cares about. And then on Wednesday, we'll get CPI, followed by PPI Thursday, and MISH on a Friday. So some catalysts, and you are getting, again, a little bit of that bounce back Monday. Look at this. On Friday, down 4% on NVIDIA, up 1% in the pre-market here. You got Palantir and Dell joining the S&P 500, so some big moves here on Palantir and Dell. Let's take a look at those. Look at that. Palantir 8% to nearly $33. I always think it's funny though, like when I think back to when Tesla joined the S&P 500. Tesla joins S&P 500. It kind of marked like what felt like the peak almost. Oh no, not quite. December 2020. So you still had some time. Let's see here. December 2020 was. Oh, yeah, no, okay, it was over here. So you had a nice run after joining the S&P right here from, what is this, somewhere December 21st. And it was rumored for a while. There it is. Right around this week candle. And a little bit of a boost there. Actually, pretty decent boost there, 25-ish%. And you didn't really peak out for another year until 2021. So then you've got, let's see what else, let's see here in the pre-market. Enphase up, what are you at, half percentage point here, or, yeah, 0.5%. Sitting at 109. Kind of a weird spot, honestly, for this one to be sitting. Thought would be a little bit more of a clear spot there. But not a lot of action in terms of volume on that one, so maybe that's why. But anyway, Q's up almost 69 basis points, and BTC back to about 55K. Now, BTC at 55K, I don't know that there's much in the way of support for it, left or right of it. Let's take a peek here. Yeah, look at this. It's in this like no man's land. You really got to get to either going 52,482 or 57,580. One of these, eh? Yeah, I don't know. You got bounce back Monday, so maybe you'll get back to that 57,580. But boy, it's been a little bit of a struggle. Let's see what else. I know Palantir is probably my favorite AI play. Not so much enthused about any kind of software play going into a potential macro correction recession, obviously. But absent that, Palantir's great. Absent sort of a macro white collar recession here, Tesla's great. But it's all going to come down to sort of your estimations for a recession. Oh, that was muted. It's trying to play the machine gun. Much better. Much better. All right. So now we're looking at Q. Let's see here. Ooh, Apple. Apple's slightly positive as well, but barely. You've got the Apple event today, which is going to be very interesting. That is today, right? Isn't it today, or is it tomorrow? Wait, hold on a sec. Apple event. It's glow time is the event. All right. Oh, no, it is today. Yeah. September 9th. 10 a.m. So, that'll be fun. iPhone expected to have a smaller bezel, maybe even slightly larger size for the Pro Max model. Capacitive touch on the side for taking pictures. A couple little knick-knack updates. I don't know that it's going to create that iPhone super cycle everyone's talking about, but whatever. So then let's see here. Top news there. China's deflationary spiral is now entering a dangerous new phase. Ooh. Oh wait, we need the scary music. Oh, that's so much better. Okay, let's see. Deflation stalking China since last year is now showing signs of spiraling, threatening to worsen the outlook for the world's second largest economy. Yeah. So I think people think deflation is a good thing. It's like, oh yeah, prices go down, and theoretically, in the very short term, it's a wonderful thing for consumers. But it's very, very dangerous for an economy. It's almost deadly for the economic engine because it just it rewards not spending. So you create a spiral of consumer-led depression, basically. I've kind of been betting that China's been in a recession for a couple years and that most of the data is just inaccurate. But who knows? Who knows? So yeah, that said, I haven't been very enthused about investing in Chinese markets. At least I feel like I have a little bit of a pulse on what's going on in the United States versus I feel like negative pulse of what's going on in China. But that's okay. Like it's important to kind of know where you're a little bit more proficient. But this is interesting. All right, so I want to see what they're saying here. So I'll write down some of it too. China deflation. You know, before I say anything or keep reading at all with the article, it's actually probably a good thing for people manufacturing in China. Chinese deflation. Let's see, how should we put it? Probably comes along with what the Economist reported about Chinese manufacturers going bankrupt. So it's kind of a way of saying supply chains got so darn loose after COVID that excess supply for manufacturing is now rampant, and therefore production prices have collapsed. This could be good for U.S. companies manufacturing in China, though, right? Potentially good for U.S. companies manufacturing in China. That, by the way, we call importing deflation. So thank you, China, for basically exporting deflation to us. China could export deflation to the U.S. Okay, good. So let's see what they're yapping about here. So deflation stalking China since last year is now showing signs of spiraling. Data released Monday confirmed that apart from food costs, consumer price growth barely registered in larger swaths of the economy at times when incomes are sagging. Interesting. Okay, so via Bloomberg here, income sagging and nominal movement in consumer prices. Okay, broader measure of economy-wide prices known as the GDP deflator will likely extend their 5-quarter drop into 2025. Okay, so expecting now 5 quarters, or expecting now the 5th quarter in a row of deflation, which largest stretch since 1993. That's interesting. Okay. We're definitely in deflation and probably going through a second stage of deflation, says an economist at Morgan Stanley. China, evidence of wage decreases. I was talking about this weekend, actually. That's the other thing that happens is people think their wages and pay will just always rise. But it's actually wage deflation that turns really, really scary for folks. Wage deflation. By the way, if you need life insurance, just go to metkevin.com/life. paid promotion of the channel. But anyway, http://metkevin.com/life. But anyway, so all right, let's see what else we have here. I should put. There we go. Paid promotion. Okay, there we go. So, wage deflation is another form of deflation, and it's potentially one of the largest drivers of service sector deflation. So, I'm going to write that down. Wage deflation, likely one of the largest drivers of service sector deflation. So, remember, we've got goods deflation in America basically already happening. And the service sector was always the one that was sort of seen as lagging, and it's still going to take time to get deflation in the service sector. I think that's coming to the U.S. soon too. It might still be a year or two away, but I think that's coming. Okay, so wage deflation happening in China. Wage deflation is happening in China. Experience from Japan suggests that the larger deflation drags on, the more stimulus you'll need to break to break sort of that process. The longer it goes, the more stimulus required to break it. See Japan. Yes. Okay. China's economic-wide prices longest decline since the 1990s. Danger for China is deflation could snowball by encourage houses reeling from falling paychecks to cut back on spending or delay purchases. Corporate revenues will likely suffer, stifling investments, leading to further cuts and layoffs, bankrupting firms. Yeah, unfortunately, that's just a deflationary recession. They're very, very painful, mind you. It's very, very hard to get through those sort of times for a lot of different businesses. One of the reasons, by the way, like my fear of this sort of deflation coming because the Fed will act too slowly is one of the reasons we thought, okay, we need to launch Stock Hack October 1st. That's our wealth advisory biz, financial advice biz. And we'll also, by the way, do, this will be more a la carte, but we'll do business consulting. So for people who need larger consulting for, business beyond just personal wealth, that'll be a portion of that as well. So I think probably a lot of people aren't prepared for a deflationary recession. And you'd almost rather be prepared than not prepared. But anyway, the danger for China's deflation snowballing. Private surveys show that's already starting to happen in sectors of the economy favored by the government, such as EV manufacturing and renewables. Entry-level salaries have declined in August, almost 10% from their peak in 2022. Wow. Yeah, that's China's like a leading indicator of that deflationary snowball. Deflationary snowball. Ooh, let's look at the spending deadline really quick.
Deadline. Here's what we're going to see this week. House Republicans are going to begin whipping a piece of legislation that would fund the government actually until March. So this is a much lengthier short-term spending bill than what Democrats were hoping for. Their bill also includes what is known as the SAVE Act. That would bar illegal immigrants from voting in U.S. elections. Now, it's already illegal for illegal immigrants to be voting in U.S. elections. But Sarah, this is really part of of that broader effort that Republicans are making to try to make this an issue going into November. This is something that President or former President Donald Trump supports, but it is something that Democrats say is a non-starter. And in a letter to his colleagues yesterday, Majority Leader Chuck Schumer made clear that he wants a shorter-term spending bill that does not include that SAVE Act. So right now, one thing to watch this week is whether Republicans have the votes to pass this out of their own chamber. Just keep in mind that Speaker Mike Johnson has a very narrow majority, so they may have to undertake this Herculean effort to try to get this through the House, but it's a non-starter in the Senate, which means, of course, even if they can pass it, they'll be starting back at square one when they return next week. Sarah?
All right, Lauren Fox, and we will be right back with you as well. Thank you.
Yeah, all right. Yeah, and more congressional infighting and nonsense. Anyway, okay, so let's keep going with this China piece here. So I think this is fascinating. So a survey of 300 company executives showed that growth in labor costs was the weakest since April of 2020, when the lockdowns began. That's interesting. Okay, weakest pay growth. Weakest pay growth since COVID. Is COVID still capitalized, or do we just start, like, lower, what's it called, like, lowercasing it? Anyway, let's see here. So, if they shut down the government, does the election still take place? Oh yeah, the election's still gonna take place. China stimmy incoming. Yeah, I recently had to take a job for less pay than I've ever taken in my whole career. So yeah, service deflation is happening. Yeah, I think that's just getting started, unfortunately. Like I'm telling you, I don't want to be a bear, and I actually think today might be bullish. I think because you just sort of a bounce back. I don't know. We'll see how like things actually move at the beginning of the day as we get a little closer. You know, in like 30 minutes from now. But it's not uncommon to get a bounce back. I mean, I don't think like the Nikkei, for example, is a leading indicator. I think they are actually responsive to what's happening in U.S. futures, but they opened up down 3%, and they actually closed down 0.5%. So you had a really big recovery there in the Nikkei, which is probably driven by U.S. stock market futures. My take. I think they're kind of following what's going on over here. You know, they had to price in the disaster that happened on Friday over here. They hadn't done that yet. But then they see futures recover, and then it's like, all right, maybe it's not that bad. Yeah, weekends are always good after, not always. Weekends are frequently good after pain. Not always. Okay, so... There we go. Okay, cool. All right, so, but yeah, that, I mean, what, the way it takes place, too, is, you know, companies will just say, hey, like, we're going to do layoffs. If you want to stay, are you willing to take lower pay? You know, that's what they end up doing. Sucks. This is why it's just much easier to hope that the economy is just going to keep booming. Because if that's the case, then you don't have any of the oopsies, the pain. Okay. So, let's see. All right, that was the survey. Okay, so I guess we can mention that. What is that? Survey of 300 execs in China show weakest growth in labor costs since COVID. Yeah. Wild. Okay. Some other analysts think GDP deflator will be negative for at least another few months. It's entrenched, some more downside. It's a cycle the world has seen before in Japan, starting in the 90s, in a period that became known as the Lost Decade. Oh, yikes. Yeah, I mean, that was the peaking out of the Japanese markets, and some of their stocks didn't recover for like 30 years, I feel like. Lost a decade. References. What else? Grinding stagnation followed a bubble burst in real estate and financial markets. Ooh. While Chinese officials have sought to stifle discussion about deflation, warning analysts to avoid using the term, it's begun to enter the public dialogue. Yeah, that's the funny thing about China, is they try to sort of manipulate what you say or don't say about them. This deflationary snowball, do you think will affect the housing market to come down? I mean, it just depends on where you are. Real estate is always such a local thing. And you can look at comps in your areas to see if prices are coming down. You know, I mean, I think we can make this pretty straightforward. I mean, I don't know. I haven't done this in a while. Let's go to like, let me go to Plantation, Florida. Some like Plantation, Florida. Somewhere just like simple, all American, whatever. Okay. Boy, it seems like a lot of homes for sale. Okay, let's reset some filters here. Okay. So, what I always just like to do is I like to look for a neighborhood. So what do we got here? This looks like a hood. Okay. Yeah, this looks like a consistent little neighborhood here. A little too pricey, though. Let's get something a little bit more mid-range. Let's go. But it's still want to be a neighborhood. Yeah, what do we got going on over here? See, this looks like a neighborhood right here. Boy, that's a lot of homes for sale in that neighborhood. Okay. Just going to draw a little boundary around just this one little hood right here. Now, some of these have lake views. That's going to be a little annoying to comp out. But it seems like the non-lake viewers, I mean, I'm assuming they're all around the same square footage. What are these twos? What is this, like a senior neighborhood? 3 and 2s, 2s and 2s. No lake view gets you about 380. Although there's a lake view one with also 380. There's a 425, or these are all for sales. Okay. So they're all pretty similar. Let's see what these were selling for last year. I always like doing that. So I'm going to go, let's go to, how about mid-20, I would say like spring of 23. Can I go back there? Yeah, like here, April, May of 23. And then let's narrow this down because we have so many to choose from here. Ooh, not that many 3-bedrooms, eh? Yeah, they're like all 2-bedrooms over there. Okay, well, that's not useful. Then we would go back to 2-bedrooms. They're all little 2-bedrooms. That's funny. Okay, so I guess I have to do that again. Usually I use the MLS to do this, but that's all right. So, okay, what do we got here? So the 2-bedrooms, 239, 250. That's for the 1114 model. I could just go with the 1114, 250. Let's see, more 1114, 256. 1114 here, 315. So I'm like 250 to 315. That's the range I've seen. Here's a 280. So you can kind of see it go up towards the end of the end of 2013. 280, 114. Oh, there's a 220. I wonder if that was a fixer. Could be, you know, you could have one highly remodeled, one low remodel. Okay. Now let's go to the more recent ones. So the range there was sort of, it's pretty wide actually for all the same. What do we got now for the 1114ers? 1114ers in this hood. I don't actually have, there we go. 250. So you can see, like, you had a range there. Most of them were at the springtime of 23. Most of these were going for that 250 to 280 range. And then you had some on the extremes, the left and the right. Tails. And this is like super basic and kind of a generic little initial preview. But like, look at that, a 245 here for 245 for a 114er in 2024. This is this spring. Look at that, 224. Again, maybe that could be the tail, but notice I'm not getting any of this. Oh, well, there's a 280, but that's earlier spring as well of 24. So sometimes what I've noticed, and this is just a super glance, just to give you a quick little idea, but what I've been noticing is that the most recent comps, like the post-June comps, have started coming in lower. I mean, here's a 180 in September, and that's only like 60 square feet smaller than that other 2-in-2 model. So I find that fascinating. I mean, here, look at that. I got 1425 for 290. I don't know why they took the pictures in the rain, but I guess if you went out there to go take pictures that day and it's raining, you're going to take them anyway. If you're that person, I guess. But so certainly like that sort of escapism that you've seen on pricing has relaxed a bit. Yeah, this has got to be a senior community. But that's a way to look. So what I would do now, if I really wanted to know how the local market was going, is I'd be jumping into the active listings. I'd go to the 1,100 square foot ones, and I'd call up agents. Look at that, 240. Yeah, 240, and what's this one? 1114, asking 225, or 275 rather. How long? Price reduced, July 27th. Still not sold. It's been over a month. 122 days on the market. It's overpriced, man. These aren't selling for 275 anymore. They're probably worth like 240 now. So you lost that like 280 in the upside you had in 23. So what is that? You know, if I go 240 divided by, say, 280 on average, it's already a 15% decline. That's just one neighborhood, for example. So those are like little ways to try to figure out how, like, is the market bottoming? And, you know, if this place at 275 is listed at 240 and it's not selling, it's probably worth 220 then you know the market's not bottoming yet. It's kind of interesting. I don't know, I love real estate in that sense because it doesn't take that much time to start getting an initial look. And then you refine by going to the neighborhoods. You get on the phone with agents. You start seeing, okay, how are the current sales comparing to the comps of early 23 and even some parts of spring of 24 when we had a little bit of a bounce, and how does that compare to you know, post-June? A lot of people are saying things really slowed down post-June, which is interesting because that's also where you started to see some of that pain happening in the stock market. You know, post-June, you know, in July we started getting our volatility, and it's almost like you started getting companies waking up to this idea of, oh no, like this is things are slowing a little bit. So anyway, let's see if the consumer holds up, I guess. Okay, so, but yeah, location dependent there on real estate. Some areas will appreciate even during a recession. Because I don't think we have a residential real estate bubble. I think some areas have definitely been overbuilt, though. Okay, while Chinese officials have sought to stifle discussion, former central banker Governor Yi Gang, okay, last week said rooting out deflation has to take priority for policymakers. Rare admission. Oh, that's interesting. That's real interesting. So I think I saw that somewhere. Well, let me see. China. Let's see if I can get an article about that. Yeah, yeah. There it is. I found it. Okay. I guess it was a Financial Times piece. All right, look at this. Chinese economists told not to be negative as rebound falters. Chinese authorities. This is from August 23. Chinese authorities are putting pressure on prominent local economists to avoid discussions about negative trends such as deflation, as concerns mount about Beijing's ability to boost a flagging recovery in the world's second biggest economy. That doesn't surprise me, this sort of like manipulation by China. So, oh well. Somebody, FD here says, there isn't going to be a recession. We are in bull market. Buy any dip. Oh, okay. All right. I guess all of the recessionary indicators are just fugazi. That's not just clickbait. How dare you say something that's anti my positioning in the stock market? All right, let's see here. Okay. So this would be as early as August. That's interesting. As early as August 2023, China pressured local economists not to discuss deflation and the failing recovery. Wow. However, now you have a former Chinese central banker. A former Chinese central bank governor, Yi Gang. I think that's a cool name. Yi Gang. Saying rooting out deflation has to become a priority. It's like SpongeBob. Priority. This is very interesting. Yi called for proactive fiscal response, accommodative monetary policy, focus on fighting deflationary pressure. So far, officials have given no sign of any kind of shift on stimulus. In a sign of pressures, price pressures are becoming even more subdued. Chinese core inflation, which strips out volatility, cooled in August to the weakest in more than 3 years. Wow. That's interesting. Oh, they are in full deflation mode, huh? Weakest core CPI in 3 years. In August. I wouldn't be surprised if they're already in a recession. Nominal expansion more useful. He's no longer ordering extra eggs at breakfast, says a 30-year-old sales engineer of aluminum products. Yikes. Plummeting market demand forced his company to cut prices and sell at a loss last year. That slashed his income to less than 1/10 of what once exceeded $141,000 a year. Wow, down to 1/10? It's got to be pure commission, man. That's crazy. Country doesn't admit there's deflation. Inflation was weaker than forecast 3 of the last 4 months, underscoring the drag on inflation. I think this is like a warning to the U.S. Underscoring the drag on inflation, producer prices have been falling since late 22. Dilemma is that even monetary expansion in China could be deflationary by being mainly directed to the supply side economy. Right. So that's actually something that's very interesting about China. Is China really promotes manufacturing, but interestingly, if you add stimulus, and this is their argument, right? So I'll put arguments now circulating that central bank stimulus might only go to help the manufacturers, which would just lead to more deflation. Yeah, that's crazy. That's a crazy irony. Mostly because you don't really see China provide stimulus directly to consumers. So I think it was, remember during COVID, China provided, I want to say it was around $500 of stimulus for consumers, while the U.S. Provided closer to $5,500 to $6,000, I think it was, once you added up some of the individual stimulus items. So, like, the U.S. basically gave 10 times as much stimulus to consumers. Most of their stimulus tends to be directed at manufacturing businesses. That's fascinating. Yeah, that's interesting. It makes you wonder, like, what does that mean for the U.S.? I mean, really, you get to manufacture stuff even cheaper in China. It's actually probably a good thing to some extent, not for, like, Tesla selling Teslas in China, but for exporting out of there. I'll write that down. Probably good for Tesla exporting Teslas, but not good for selling in China, right? And I want to say, how much of Tesla's revenue is still coming from there? Is it like 20%? Let's see. Tesla, 10K. Let's find out. I'll probably have to go to their annual report. I don't know that they're going to segment it out in the quarterly. Apply filter, 10K. Let's go take a peek. Take a peek together. All right. China. China, China, China. Come on, give me my segments. 63. Come on, man. I don't have time to click through 63. Oh, here we go. Following table presents revenues by geographic area based on the sales location of our products. Based on the sales location. Okay, got it. So where are they selling the product? So China's, oh, yeah, it's still like 22, 23% in 2023. I mean, I know you could just hopefully export more elsewhere, but still a good chunk. 21,745 divided by 96,773. 22.47% China. Very interesting. All right. I'll say, although 22.47% of Tesla sales come from China, which could be hurt by the depressionary environment. There we go. Very interesting. Biden changing the definition of a recession. Yep. Old news. Somebody says, I honestly think China is definitely in a recession and headed towards a depression, but almost nobody is talking about it. The Chinese people are suffering greatly right now. I agree. Somebody says, you do know once recession indicators turn on, it takes an average of 1 to 3 years for an actual recession, right? Yeah, I mean, look back and you'll start looking and you go, oh my gosh, some of these indicators have been flagging red for 2 to 3 years already. That's the scary thing. That's exactly the point. How's our yield curve doing today? Let's see here. Oh, this head's up a couple basis points. The 2's up 3.5. Oh, that's a little bit more steepening. But you're still going to be positive. I mean, this is so volatile. Every day, bonds are just up and down, up and down. Yeah, you're at about 4.7 in the inversion right now. Sorry, uninverted. Okay. Okay, good. All right. That's a very interesting piece there. On China. Okay. Here's somebody arguing jobs don't justify a half-point cut. It's kind of like what I was talking about this weekend. A bunch of companies think that the report wasn't bad enough. Balance is shifting towards only a 25 basis point rate cut this month, but deeper thereafter. See, I think that's the opposite of the way they should do it. But, you know, I ain't the boss. Gotta start front loading. Start delaying and just gonna push you into a recession. Yeah. Alright. Oh yeah, here's somebody else talking about it. A series of 25 is just fine.
Yeah, and I think, listen, if you take a step back and some of the things that we focus on, let's pull out the beige book, for example. You had wordsmithing there, the comments related to the word soft, softness, softer, softening. You had 55 word counts in there. Recession came up 0 times. FactSet did something that was pretty interesting where they're doing the wordsmithing as well. How many times did you hear the word recession in earnings calls? It's at the lowest level that we've seen in quite some time. So, these companies are on the front line of the economy and they're not mentioning recession. So from that perspective, a little bit of profit taking, not surprising.
That is true. They don't mention recession. They do just talk about a slowdown.
On weakness in here.
But then again, most of the time, people don't mention recession until it's too late.
We do a survey of Wall Street strategists. We had 20 participating in our most recent survey, and the average year-end call is 54.69. So we're pretty much there right now on the S&P, right? All we have to do is gain, I think, less than 1% in today's session, and futures indicate that we are headed that direction. You think we can gain much more than that?
Sure. I don't see why we can't simply head to new highs before the end of the year. And again, take a step back. You're basically getting into an easing cycle. The people that are providing liquidity are telling you we're going to be providing liquidity. And I think that's a pretty big catalyst as we head into the end of the year.
I want to take the flip side of the argument here, Jack, because even though you're quite sanguine about the direction of things, what would cause you at this juncture to change your mind, knowing that we are seeing strains in the consumer and knowing that there are plenty of concerns out there on how fast this labor market turns?
And I think that's the key, right? Just paying attention to what we're seeing in the jobs market. I know we're seeing cracks in the lower end of the consumer basket. It's really a bifurcated consumer, if you will. But again, keep in mind that lower spectrum, that lower quintile income bucket, they account for less than 10% of total aggregate consumption here. So the part of the economy that's being driven is really the upper echelons of that income basket. Household net wealth at all-time highs. Corporate balance sheets are at very strong. I just think it's very tough to make a discernible bearish case in here until you see that labor market really rolling over. And right now, we're just not seeing signs of that.
So with that nuance when it comes to the consumer and with the resilience of the overall labor market,
I don't know that you're not seeing any signs of that. If you actually read the beige book, I don't know if this guy actually did. He was talking about the beige book, but if you actually read the beige book, there are a lot of companies in the beige book that are like, yeah, we're not doing layoffs now, but like, we're not hiring anymore and we're trimming. They're basically like, we're on the edge of doing layoffs. Pretty close.
Taking a back seat. We're seeing a little bit more coming from the cyclical side of the equation. And again, I wouldn't be shocked if we...
Yeah, they said all this before 08 hit too. I totally agree. I think BTC looks primed for Thos week. What do you think? I don't know what that means. I'll look though.
A little bit of a bounce off the discretionary side simply because maybe the market's a little bit overshooting to the bearish side on the consumer, and it ends up being maybe a little better than expected, and you get a rebound, especially in housing, as rates start to move lower.
We had a guest last week, Greg Bottle from BNP, saying that rather than buy the dips now, Jack, he wants to buy volatility when you see that drop off. What do you think about using options here? Does it make sense to you?
Yeah, I think there's a little bit of a case to be made for volatility. Obviously, if you look at the seasonal patterns for the VIX, as we head into the election year, vol tends to be elevated September into October. So maybe it makes some sense in here to be buying volatility. But I think once we get into that sort of beginning of October, I wouldn't be shocked if sell vol comes back into play. And that's what you want to do as you head into the end of the year. And vol basically gets back to more normal levels with, a sub 20 handle.
Jack, I get the rationale to dip into some of these underloved sectors so far. Maybe positioning was too bearish.
As far as this Bitcoin question, I mean, this is what I'm looking at for Bitcoin. You had a glorious bounce. I think it was on Friday. Right there, like my line is at 52,482. And look at where it bounced. It bounced at 52,554, which on a percentage basis is like basically right on the line. It's crazy. Really, really good bounce there. So I mean, so far, I mean that doesn't indicate bearishness here. And the Qs are still trying to really hold on to this this 80 bip rally here. You got the S&P and including Dell and Palantir. Those are moving up nicely. So. And I don't see a lot of negative catalysts today, but I don't know yet on direction. I guess we'll see.
Here, but certainly that leadership is going to shift hands, we think.
all right, Jack, really great to speak with you. Joining us from Natistic Investment Manager Solution. Appreciate.
Yeah. Anyway, so yeah, it's interesting. I'm trying to think of the psychology of companies mentioning recession in their earnings call. Like, I worry that if a company mentions recession in their earnings call, it's probably almost like a lagging indicator. Because if you mention recession in your earnings call, it's because you're trying to, like, explain something bad that's happening. So you're trying to justify the bad. You know, and that could be that it's sort of like a response. It's like, oh, okay, all the other companies are laying off because of recession. Yeah, I guess we are as well. I think that's what you get when you're already sort of in the midst of it, when you're in the thick of it. But as a leading indicator, I think you're more likely to see declining pricing power and mention of more sales and advertising strategies, kind of like the stuff what we're seeing. You know, trying to be more operationally efficient, you know, all that kind of stuff. So I think if companies start coming out and talking about recession, their stocks potentially tank because it implies that the company's fearful. And I don't know if that's like necessarily a great leading indicator there. When did they have this Art Deco desk over here at Bloomberg? Everything turned into these Miami purple and turquoise-ish colors. You know what? I don't like it. So here's what I have to say about it. Changing the channel. Oh, and I get a commercial. Rip. Rip. Yeah. Oh. Alright. Suits are going to wipe retail to take back the market for the final time. Oh. We got AI now. You don't need word counts. Well. Yeah. So, we shall see. Oh, this week is what you meant. So, yeah, we talked about Palantir a little bit. Big fan of Palantir AI. Not the biggest fan if we do go into a consumer, a white-collar recession. Let's see. Bitcoin is in a cup and handle, but it has to break upwards. The economy is doing great. Why do people keep talking about recession? Oh, this is the same person that says there's no recession. Well, I think FD implies that if you think there's going to be a recession, you have to be short. You don't actually have to be short. You could increase your allocation to cash. You could still maintain exposure to stocks. You could increase your allocation to treasury bonds, right? So, like, it doesn't mean you have to try to, like, play the market and go short the market. I think people mistake that a lot. But FD is interesting. He spammed like 20 times today. Market is going to new all-time highs. I think FD might be pretty deep on margin over here. It might need a little bit of a bailout. Market hit lows for the year already. Okay. I would like to know what Kevin would do come October and the labor market data is worse than expected. Is he passing the... Well, it depends, right? So, coming to right before the election, when I think you have the most volatility in markets, I think you got to kind of look at everything in whole. Is inflation missing? Is the jobs report data collapsing? What's the trajectory of the inversion or the uninversion? Where are we with the SOM rule, right? We just went up again in this last report. Where are we with real domestic investment growth? Where are we with AI? Where are we with the personal savings rate? Where are we with temporary job hiring? Where are we with commentary from Powell and third quarter earnings? So I think I'll write that down. You know, what I'm watching going into Q4 and post-election rally, question mark? So I'm going to write this down. So that way we have it. So I'm going to be watching Q3 earnings and Q4 guide. Will be critical. Labor labor report. So we would have August and September by then. We'll have 2 more reports. 2 more reports by then. 2 more reports by... Actually, 3 more reports by election. I'll do that. 3 more reports by election. Is that true? BLS schedule of releases. I think it is. Okay. November 24. Employment situations on the 1st. Yep, right before the election, they released the data. 3 more jobs reports by the election, and I think you get 2 more. September, yeah, 2 more, and CPI you're not going to get again. Schedule of releases. CPI. No, you'll get November 13th. 2 more inflation. Inflation reports. Bad would be super low / trending towards deflation on month over month. I would say for jobs, bad would be sub 50K. Certainly sub 100. So I'll say or sub 100K averaged of those 3. Q3 to Q4 guide in layoff mentions, you know, right? That'll be big. Layoff mentions and pricing power / ordering into holidays. That'll be pretty important. That'll really give us business expectations. Then let's see here where we are with the inversion. How steep is the inversion, the uninversion? I would say rapid jumps up 50 BPs would feel bad. Those are going to hurt. Domestic investment growth. More negative. Temp job hirings. Recovering or not. Bad. How about... Because after then we would have had our first cut, right? Will there be any bounce in construction job openings? Any bounce in construction job openings after first cut? If not, not ideal. I'll say not ideal. It's not necessarily bad. But those are sort of the things I'd be looking for. What else would I be looking for? Let's see. Obviously, JPOW commentary. You know, that'll be pretty useful. Just because, are they panicking more? That's what I'd be looking for. Are they panicking more than JPOW did at Jackson Hole? He seemed panicked at Jackson Hole. What's another one? How about personal savings rate still below 5%? But this is a mixed one. This one is mixed. Sometimes, as a recession begins, the savings rate increases as people begin to panic, but other signs would be screaming by then. That's interesting too. Still probably peaked out. Any recovery in private jobs or healthcare, gov, edu, because all those have fallen under peak so far, which is recessionary. How about ISM manufacturing? Any recovery in manufacturing? ISM manufacturing or over, or I'll say still under 50. And ISM services still pre-COVID slow at barely over 50. Those are all here. I'll put them up on screen so you could take a screenshot of this if you want. So you could hold me to it. Okay, one sec. Here. I'll put this up on screen. There. You can take a little screenshot. There you go. All right. So that's sort of like what I'm looking for. Notice how it's not like one thing, right? This is a lot. So it's not, and notice how really it's not like, is Tesla 300? That doesn't matter. Oh, but what I will say is this. Did we have a severe market correction, right? Because if you did have a large correction, that could be recessionary. So I would say QQQ to 435, probably not a big deal. QQQ for sub 401 might be recessionary. Probably not a big deal, and just a dip. So sub 435, hey, it's just a dip, who cares, whatever. Sub 401 might start getting recessionary, because that's really where you're going to get the layoffs. What happens to the stock market if the Fed doesn't lower rates at all this month? I mean, I think people always ask those questions. They're like, oh, hey, the market's pricing in that the Fed's going to do this, and then what if they don't? I mean, well, then it'd be bad, right? There'd be a shock to markets because now they would lose trust in the Federal Reserve, but the Fed won't do that. The Fed tries to massage the pricing beforehand so that way markets are prepared and they're not caught off guard. Like right now, this is going to get either closer to 1 or 2, and right now we're at a 25% chance of a 50. So markets are pretty convinced we're getting our 25 and not too optimistic about a 50 based on that Waller commentary and Williams commentary we got on Friday. Yeah. Just stumbled upon says, I took a screenshot. Nice. Just stumbled upon. Crap, a typo. It's all right. Dude, it's like 6:26 a.m. It's early. You're allowed to have typos on the super chats. Mark, yeah, Palantir and Dell are getting included in the S&P. So they're not really fundamental to the companies, but these usually in the short term provide a nice little boost to the stocks. So not uncommon. All right. Ooh, Tesla's almost up 3% in the pre-marks. All right, let's see what's moving. Let's write some stuff down. Let's see what we got. All right. So, Tesla's trying to go to 221. Let's see here. Dell, Palantir, I don't know how much momentum they'll continue to have after what's already happened in the pre-market. Qs are trying to move up. Amazon's trying to move up. Yeah, I'd be looking at like Amazon 180. Nvidia 108.08 for sure. Seems like a natural. 108.08. And Space Mobile. Be careful on that one. But I'm curious to see how the first few minutes go. If people got spooked on Friday and they're putting in sell orders for the open. Russell's up. Is it? Hold on. IWM. 20 basis points only. Okay. ARM. Ooh, ARM's running. Let me write this down. ARM. Tesla. AMD. NVIDIA. APL. Meta. Qs. QQQ. BTC. There you go. Probably what the list there to pay attention to. ARM. Now, where's ARM gonna go? ARM. Ooh, 134 on ARM. It's got that 117 line. Oh, and then obviously like a 113 or something for end phase. But the liquidity on end phase usually isn't that spectacular. So, all right. It's time for a little bit of the tradition. Good luck, everyone. Apple's iPhone event today will be entertaining. If someone's asking catalyst for the week, we covered this already. CPI, PPI. All right, here we go.
Well, that would then argue that it is a monopoly.
It's not their fault. It's like the Apple phone. Really good. Not their fault.
Not their fault. I'm not sure that matters. I'm not sure how intent matters. There it is, the opening bell for this Monday morning here at the big board medical device company Medtronic celebrating its 75th anniversary.
On tonight, only
CEO
at
Jeff
money.
Marta, I have it right here. Look, it's going to be on Mad with Jim. That's later tonight. Over at the NASDAQ East-West Bank Corp based in Southern California.
Yeah, remember? I
Serving the
did.
Asian American community, did the
How about
honors.
when was the market down like it was last week? Well, it was in March of 2023 when these banks were on the red hot griddle. So happy anniversary.
Yes.
All right, interesting. So Apple still slightly red. Looking at, yeah, getting a red candle on Apple. The first few minutes are always crazy. Red candle Apple, red candle Tesla. That's surprising. It gave that up really fast. IWM just lost the lead. Nvidia's continuing to go. Oh, there come the Qs back. The first few minutes of vol. Insanity, folks. Just insanity. Tesla. Come on, Tesla. You could do it. You can do it. Let's go. Let's go. No? I don't know. Yeah, look at that. Flip into a red. Ooh. Oh, Nvidia. No, it's still going. Still trying. Wow, Tesla. Come on. Pick it back up. Oh, well, the Qs are happy. Qsy doozies. They're not having a problem here. Apple just went positive, though it's still bobbing around. And Meta, 143. Dell's up. Palantir went up another %. There you go. Look at that Palantir. Nice. So I'll run there on Palantir. Let's see what Jimbo's got for us today.
Look at the numbers in South Korea and any number of other countries. Our country benefits from immigration. Otherwise, our numbers might look somewhat similar.
Good luck.
And want to talk about immigration?
No, immigration, that's the hot button. That's the third rail for me. I'm not touching that. I once saw a mouse electrocuted by the
It is nice that
we
we only talk about politics when forced to.
Well, immigration keeps wages down, but I don't know if you're...
Yeah, it does. By the way, what happens
That's a
when you,
double-edged
what does
sword.
happen when you put tariffs on goods and you
Well,
stop immigration and force migrants to leave
well,
in terms of wages?
Unless you're Hamilton, I'm kind of against it.
Isn't that going to be inflationary?
Of course. Of course.
Is it a one-time, though, and then you
smooth
sort of
quality?
even out?
I don't know. I mean, when you see tariffs like that, obviously you think about 1929 to 32 and realize how wrong they are. Or you see that, I mean, maybe he is invoking Hamilton. Maybe Trump has saw the show.
Right.
The show's pretty good.
Yeah,
maybe
show's
saw it
pretty good.
twice.
I think, no,
and
I
it's
think
very
he occasionally
pro-tariff.
would watch it
It's very
sometimes.
pro-tariff, the show.
Our show's
The show. The theater, whatever it is. The Hamilton. That's very
What are they
very
talking
pro-tariff.
about?
You don't think of that, but
the show. You mean
the show, the Broadway,
The Broadway show.
It's very pro-tariff.
Oh, okay.
Hamilton was a nationalist.
Yes.
So
yes.
maybe I'm saying Trump might have seen the show,
that show.
the
I
Broadway
thought you
show.
were talking about our show.
No, not art. Oh, David, I'm talking about.
Boy. It's just nonsense. Nonsense. Okay, let's
Turn
jump.
around, Eliza, in order to get back on their feet.
Well, I think
is
they
it?
need a macro turnaround a little
Oh, Big Lots needs a macro turnaround. Good luck.
from Consumer trends. So even though you would think that consumers trade down to discount stores like Big Lots in a crunch or amid of inflation,
labor costs,
it's been more of this time around at least, this round of inflation, this crunch has affected lower middle class Americans so much, and they are the ones who are the target shopper for a place like Big Lots, and they are simply spending no discretionary income on home goods whatsoever. They're just trying to buy food and gas. So if that loosens up, that'll do the trick potentially for Big Lots, but I think they also really need to focus on basics. They had for a long time shifted their focus to furniture a little bit, and that was not the best move for them, especially once housing slowed
We're competing
down.
with Target, and I mean, who goes to Big Lots for furniture?
It's important to point out, of course, that shares of Big Lots still halted after an absolute wipeout. Great reporting. Really appreciate your time on this Monday morning. Our thanks to Bloomberg's Eliza Ronald-Hannon. And for more on these broader markets, let's turn the conversation over to Marianne Bartels. She is Chief Investment Strategist over at Sanctuary Wealth. And Marianne, just one more time, let's run through just...
Ooh, Tesla's moving a little bit right now. So's ARM. Tesla just moved. It's getting rejected by about that 218 line right now. I'm going to keep an eye on that one.
Collapsed. Are things really that bad?
No. So the way I'm looking at it is that this is a test of the August lows. And we're starting to get some fear and panic in the market. So how do we measure that? We look at the VIX index, which measures volatility. That's above 20. And historically, when you're above 20, it's been a very good time to actually buy equities. If you look at the put to call ratio for equities, we're starting to see some panic in there. And some of my breadth measures are getting close to buy signals. So we may have a little bit more volatility, a little bit more chop. But I think what the surprise might be is September's not going to be as bad as some people are anticipating.
At the end of the day, what does this mean for how much drawdown?
Nvidia is starting to move down. Apple down about 15 basis points here. Qs have somewhat topped out at the moment, at least.
Floor.
Well, the floor is around 5,200 on the S&P, and that's really it. That's not what I'm really focused on. You may get there, you may not get there on a test. The indicators suggest that if we have 1 or 2 days of really big chop, we're going to really start getting some great buy signals. So I think we're pretty close, which means none of us can really time the markets exactly when they bottom. But now would be, if you were looking to buy the markets, we think this is a good time to actually be nibbling in the markets, because we do believe we're going to continue to get a year-end rally.
What about the concern, our Bloomberg...
Yeah, I think absent a recession, post the election, kind of agree.
...in this rally, right? And you can see that with strategist targets. They keep having to raise targets as the index climbs higher. If they're buying at, already kind of heady valuations, and we see a correction like the one we saw in August, or a week like we saw last week, don't they have to sell earlier? Doesn't that kind of take, the conviction hodlers out of the equity market?
Not if we get a year-end rally, it doesn't. And let's, we've all been talking about the amount of cash that's on the sidelines. That's not participating.
No. Don't make this commentary again. I've talked about this a million times. Investable cash is at all-time lows. It's cash that's on the sidelines. This is like the only argument that these people make. It's like, no, people have already priced that in. I'm flipping the channel. Tesla's doing well right now, breaking 218 right now.
Remember that one?
Yeah.
Until a judge here in New York issued a preliminary injunction going along with Fubo, saying, no way. This thing's
Fubo, you got a little
anti-competitive.
$2 stock there. That's a rip-up.
But in that decision, the judge also discussed the long-held practice of bundling, where a content company would say to the distributor, the cable company, you want this network? Well, you also got to take those networks, even though nobody really wants them or watches them, because we have them and you got to buy them. And in this dispute, Disney, I should say DirecTV, has directly referenced the decision by that judge. In this part of it, there's no power to there's nothing enforceable, but she did point out, basically saying, that in the context of the venue joint venture negotiations, Disney insists on bundling and penetration requirements. And the district court judge in New York found in the context of that, they were unlawful, anti-competitive, and bad for consumers. And they go on to say Disney wants to force DirecTV to carry a fat bundle. Of course, the less desirable programming, while itself it offers skinnier bundles of programming that consumers want. And they've never considered a good faith complaint in these circumstances, and DirecTV may well wish.
Q's moving up a little bit here. Q's highest level of the morning right now. Apple lowest level of the morning. Nvidia's ticking up. Tesla's getting a little stuck at 218 at the moment. AMD's moving. ARM's moving. IWM. Small's up. Let's see here. Yeah, look at that. The Q's and do's. Not bad. Not bad at all. And let's see here. What else? Nvidia. Yeah, Nvidia's been somewhat stuck at this 106 here. Usually it goes to 108.08. So I'm just wondering why it's so slow at the moment. So I've been watching that one. ARM's 5%. Dell 5%. Oh, Palantir ran up to 11%. Wow. Nice. Amazon, couple percent. Yeah. Yeah. Q's red candle out of nowhere there. All right. Well, it's a little bit of a weird market. A little weird.
They didn't have to pay.
I remember talking to Denholm about it, the company's chairman, because there is that question as to, well, how do you apportion resources from one to the other
Elon?
when he controls, obviously, and has raised a lot of money for XAI, and then obviously Tesla, which is using generative AI in terms of its self-driving and doing and apparently having great success potentially.
The most of maybe anybody, a competitive car in China with a price differential that's rather. I think the Neo, red pill, green pill, whatever. The Neo is frankly the cheapest car on earth.
Yeah,
and yet it drives like a charm. My wife took a Neo out.
Did she really?
She loved it.
Where was she when she was able to do that? No kidding.
Europe, yeah, it's like fantastic. It gets like 17,000 miles of the charger, something ridiculous.
You do wonder when again back to China and the ubiquity of their EVs.
Well, that's talking about battery swapping.
Basically, the battery industrial complex. Whether and how they're going to be able to dominate so many markets other than the U.S. I have an interesting question for you.
Sure.
Would we be better off just letting it be a free-for-all here?
Oh, my.
And allowing U.S. consumers to buy automobies for $13,000?
Well, then the only thing that people would be happy for in Detroit would be the Lions looking really good. Because I got to tell you, one more reference. Because I got to tell you, David, if you brought those cars in, do you remember Phil LeBeau's incredible reporting about South America?
I do.
Well, they took 1/3 of the market instantly. Well, they would take 1/3 of the market instantly too, because right here you get them, David. They would be the price of your cable bill.
But they're subsidizing that entire industry. Should we not benefit from the subsidies for our own consumers? By the way, I'm not saying that in any way I advocate that. You have two presidential candidates who are going to speak strongly against that, I'm sure.
Right.
Tomorrow night in their
That would make America bad again? What would that do?
I don't. Well, it would benefit consumers in the short term.
By the way,
you can say the same thing about solar panels, which they dominate. Why don't we just... Well, fine.
Why don't we just wipe out everything we make here? We already did that. We already did that. We wiped out every single factory.
Apple down 1.25 right now. That's a good chunk.
That's a good. You're right.
Have you noticed when you put people on from the White House or from Republican Party, whatever, they no longer even attempt to be what their job is?
I don't know what we were referring to.
Well, you can come on and you have to identify yourself as being no longer really affiliated with the administration because you're going to talk about candidacy. So we just have to be a little more mindful when we have these people on because they talk a pretty good game. This has nothing to do with what we're asking them.
But that's always the case with politicians.
Well,
you know that.
I'm just pointing out that I don't want anyone to think that people who come on are necessarily like I'm trying to do this for the country. I'm trying to do this for the candidate, which would be good for the country. Just a little, kind of.
I did want to circle back quickly, if I can, Jim, to the dispute between Disney and DirecTV, another distribution deal dispute, although interesting that they're bringing in that decision by the judge on venue. The venue itself, though, remember, it's Fox, Warner Brothers, and Disney. Given the delay, the fact that they probably can't get this thing up and running if they even wanted to until football season's mostly over. You've got Warner Brothers only has one more year of the NBA. By the
Yes,
way, remember
that's
that
true.
case is also going to be
my.
going on. And then you've got Disney launching ESPN, its own streaming product next summer. I just wonder whether Venue will ever see the light of day.
I don't know, but I would say that we are at this period where Netflix had a really bad quarter not that long ago, and everyone lowered numbers. And ever since then, Netflix has been coming on.
Yes.
I'm not seeing these different other options, these streaming coming along as being significant. Maybe you can tell me which ones that haven't peaked already.
No, listen, we come back to the same thing we've talked about now for years, which is the need for consolidation and scale amongst those
Right,
streamers
so you
that are
do
left,
need-
including the likes of a Max or a Peacock or a Paramount.
Well, I don't know if
Plus.
that can happen under a Harris administration versus
Very,
the Trump
very much
administration.
unclear. Let's actually come back to regulatory because we've had one trial that's starting today. That's Tapestry Capri.
Right.
Accessible luxury.
Yeah, and
where there were a lot of questions about whether and why they brought an action, that being the regulators.
Right.
We've got another trial that continues that seems to be going pretty well for the government, but not a surprise perhaps for us, which is Albertsons and Kroger.
Oh, well, okay, so
Or Kroger's
David,
desire to buy
I need
Albertsons.
you to say something that the government may not seem to be aware. The company that would be buying the overlap stores is probably better capitalized than the two companies that want to merge.
Well, you're talking about the decision to divest many of the stores to CNS.
Yeah.
That said, so far in terms of what we've seen, and I'm relying on the analysis of others who are listening, the government's made a pretty strong case, and/or at least the CNS has failed to make a good case as to why it is in a good, credible position to be a real competitor.
This is all the remorse that came from the deal where Safeway was purchased, and Safeway sold things to Hagen, sold a lot of stores to Hagen. Hagen immediately went bankrupt, and many of the stores were sent back to Safeway instantly. So,
but if you got a favorable judge for the government. And if you're failing to make the case that they're a credible buyer, that's not looking so good for you.
No, it's not. And yet, strangely enough, I would be a buyer of Kroger here because they're doing so well on an operating basis.
That's a death knell for Kroger, I guess.
I mean, you're talking about a couple of majors, Costco, Walmart, and Amazon that do grocery. But obviously, you have a very good player in Kroger.
Yeah.
Rodney McMullen is very, very good.
Changing gears a bit here.
Airlines?
No, just some very happy news for somebody that you and I both know well.
Who's that?
That would be my producer, Carrie Caulfield Landry.
Curry?
Yes, or otherwise known as Curry. There she is with her husband, Pat. Congrats to them both. Last Tuesday was the big day. We've been waiting. 8 pounds, 11 ounces. Welcome to the world, Lucy Corcoran Landy. We're very happy for both Carrie and
remember,
Pat.
she worked for both
If
of us, so it works with
yes,
both.
if
I'm
she's
sorry.
half a good a mother, she is a producer, that kid's going to have a great life. And I'm sure, of course, she will be twice what she is.
All right. Kind of bored of the CNBCs. Let's go on over here. Let's see the Doomers. They have anything for us? iPhone debut today.
It's going to make AI on my smartphone something I'm interested in. But as Bloomberg's Mark Gurman's reported, the new iPhones will ship later this month, but Apple Intelligence, its artificial intelligence platform, will come in iOS 18.1 next month. And there's kind of this staggered rollout. Although I would say the street seems pretty bullish about the idea of a super cycle with consumer.
Yeah, I don't know about a super cycle. I'm feeling a little like I'm seeing some toppiness here. The Qs are having trouble. The Qs are consolidating. Here, let's look at this together. Hold on. So the Qs are consolidating. You couldn't really get above about 1.18. Nvidia topped out at about 106.50. I'm actually kind of bearish now on that because it was supposed to go to 108.08. You know? That's where the line was. The line was 108.08. It should have been an obvious run. It wasn't very obvious. I don't know what the hell happened there. So that's odd to me. Then let's see here. Then you've got Tesla. Tesla curved. See, I have a 218 line here. And look at that. It really got hit on that 218 line. Then I got AMD capping out a little bit. ARM capped out. This was up like 4 or 5%. And then I got the IWs and the ends. They were up 40 bips. Now they're up 23. Apple just like pooping the bed or something here. I don't know what the hell. With being down 1%. I mean, I think it's probably like a buy the rumor, sell the news, like pre-sale. You know, usually it's like people are like, oh yeah, Apple's going to be a buy the rumor, sell the news. So just sell it before the event. Who knows? Ooh, a green candle. So I don't know. It's like less euphoria than it seemed like pre-market was implying, you know?
Yeah, so 4 variants of iPhone 16 generation. But if you think about it like this, wearables and iPhone in aggregate is 60% of revenue. And while you have this annual cadence of smartphone handset refresh, it's been a couple of years since on the wearables side, there has been a rethink and variety of new products. And there's a lot of excitement around that, particularly at the low end when it comes to AirPods, because that might bring in new buyers that are yet to be a part of that ecosystem. And of course, as we always talk about on Bloomberg, right, the services story depends on the installed base. How many of the devices are you using and how much of that prompts you to part with your cash on a monthly basis, subscription basis for other software tools. So that will be a big part of it as well.
Ed, we thank you so much for your time. Looking forward to your reporting throughout the day and maybe even some scoopage. We'll see. That's Ed Ludlow in Cupertino. Now, coming up, we're going to break down Murdoch's grip on News Corp with a starboard.
Apple, in fairness, is recovering right now. It's kind of coming off that bottom. It was down as much as 1.2%. Now it is recovering a little bit. All right, they're just going to play music, so fine. All right. What else, boys and girls? Nothing. We want to go to Varnes? Looks like a little bit of a bounce right now. Actually pretty decent. You know, you saw some of that pain there. This is the thing, the volatility is a little interesting at the moment. You got, oh yeah, nice bounce there. I got to give it to it. Look at NVIDIA. Look at that. Good little bounce of dudes there on NVIDs. And the Qs, wow, what? That's crazy, huh? Just out of nowhere, giant green candle. Let me see. I don't think there was any news, but that's surprising. So you were having such a hard time moving up, and then you just got this sudden pop there. Yeah, look at that. Somebody hit the buy button. That's what it is. Why did it go up? Somebody bought the SPY. Who did it? Who is the buyer? I don't think we have economic data today. No, we have wholesale inventories in 9 minutes. I don't know. I mean, I guess that could give you a little bit of a tell for stocking up at businesses. You know, what are they seeing, so to speak, right? That's possible. Sometimes you see that sort of activity where you basically have, you know, this idea that, oh, okay, yeah, well, if the businesses are loading up, then they must be optimistic on orders, and so that's a good thing. Maybe. So we'll get those numbers in just a moment here. The Qs, I don't know what just happened over the last like 2 or 3 minutes here, but they got really excited. So the Qs are happy all of a sudden. And they weren't there for a bit, and now they're going to the moon. So Q's happy, NVIDIA's happy, and a little toughy to really get a direction on here, eh? So AMD popping back up a little bit. Could it be the expected 2.6 inflation rate? I almost said deflation. We're expecting 2.5, but sure. I mean, that's good. I don't know how that we could really be bearish on inflation right now. I don't think so. As far as BTC, yeah, you're right. You're right. You're getting some enthusiasm here on BTCs. That is true. That's pretty good. Qs, they had their little bounce there. Let's see if it could hold up. Meta a couple percent. NVIDIA coming down a little bit here. AMD. Yeah, look at that. Tesla on the 200. What is this? Stuck between VWAP and the 200? That's so tight. The 200-minute moving average and VWAP. Well, let's see which one it breaks, you know? You're at like a 6-minute consolidation right now on Tesla. So, it'll be one way or another. Okay. Q's, I'll push a little. If you don't have an iOS, you're telling the world that life didn't work out for you. If you were a little more successful, you'd have an iOS. Wow. I think Master Shake here just single-handedly offended every single Android user. Hold on, let me find my Android and go cry. Let's take my little, it's okay. It's okay. It's okay, Android. He didn't mean it. Hold on a sec. I gotta send a text message.
Spectacular. Case closed. Taylor Riggs, thank you very much indeed for sticking with me for the entire hour. We will be watching you on the Big Money Show live 1 p.m. Eastern, right here on Fox Business. Check that market, please. 24 minutes
That's
worth
Apple.
of business under.
They're talking about Apple there.
Is moving up a bit more, up 333 points. Nasdaq up close to 170, 180. Dow winners, put them on the screen, please. Lots of them. Boeing up 3.5%. American Express, Amazon, Goldman, Salesforce on that list. S&P 500, the winners there. So far, Moderna, United Airlines, good Lord, an airline at the top. Dexcom, Domino's Pizza, and Boeing. They've got a union agreement there. Moderna, Dexcom, Tesla, Monster Beverage, Netflix. There you go. That's what I wanted to see. 2.5% up, 682 on Netflix. How about that? Still ahead, Joe Concha on Kamala Harris finally adding some of her policies to her campaign website. Aunt Del Cueto, an illegal migrant who had been arrested and accused of rape, had been released by a court in Massachusetts. Brian Bremberg on proposals to expand the child tax credit. And Barstool sports guy Dave Portnoy, a big Taylor Swift fan. Does he think...
I like how they call the Barstool sports guy. That's funny.
Glow time?
Oh, God. You mean when I went underwater and had to do the...
I think it was glow time.
All right, well, don't bring me back to that. I'm glad I'm
That
good.
was an
I'm glad I'm
amazing-
good
no,
in the
'cause
water.
We'll have to go out to a 90-minute
Yeah, I had to go,
helicopter
I had to
ride,
go 100
and
miles
I
off
want to
coast.
I want that submerged helicopter thing.
That was a life memory. That was a life memory.
I love
Both the
your
training
stuff.
for it and the actual
No, but
trip.
many of your pieces
Thank
are,
you,
are
Exxon.
life-changing.
Yes. All right. What do you got on the show tonight? Speaking of
Okay,
life-changing,
I have Medtronic on tonight, and Medtronic is a company that is very pro AI. And I put it to Jeff Martha, does anyone care? And he said they should. But the more important thing with the stock is that it sells at 16 times next year's earnings, and it's like a company that has done well here, taking the share from the Mag 7. Remember, that's now a share donor, as they call it.
yeah,
Share donor.
sounds
Yeah.
ominous.
I want you to have a good time finishing the show.
Thank you. I'll see you later. I'll see you
Read that
after the
busy
show.
piece in the interim.
I will read
in
the
the
Jim
commercial.
Stewart
The
12,000
word.
piece. I'll also keep an eye on the markets, which, as you've seen, are up to a positive start. Of course, that after last week's down week, significantly down. Keep it here.
I love the little tube. The little tunes. Wrong mute button. Little tunes they have. Reminds me of actually COVID. That's probably not a good memory. But we're all locked down. Alright. What else here? Okay, we got inventories in a moment here. So let's see what goes on with inventories. You've got Tesla did pick a direction. And take a look at this. This is it got stuck. This reject I thought was an easy call. The 218. But then we consolidated in this mess. So we knew it was going to break up or down. It actually broke up. At the same time, the Qs are at their highs today. So you could, I honestly don't think wholesale inventories are going to be that big of a deal. Like, they're expected to be 0.3 for wholesale inventories. It's not even retail inventories. For wholesale inventories to be bearish here, I feel like, I don't see them being bearish. I mean, you got Q4 to stock up for. I don't think you're going to get some kind of number that the markets are really going to react to here. I mean, I guess if it was like negative and some kind of panic or whatever, maybe. But the Qs seem pretty happy going into this catalyst. Honestly, it's proving to continue to be a relatively bullish day. So where could the Qs go? I don't think I have a line anywhere close. I mean, trending towards 460. That would take another 2%, less than 2%. You could. I mean, that's like full bull mode, right? So 460.58 divided by 454.60. You only need to go up another 1.3%. You could easily have a 2.6% day on the Qs. That wouldn't be unreasonable. So, you know, I guess let's see what the data is here in about 20 seconds. See what happens. But, yeah. Things seem optimistic. So, all right, here we go. The data releases. Remember, if any of this makes you nervous, get life insurance in as little as 5 minutes by going to metkevin.com/life. Point 2 for wholesale inventories, but trade sales month over month come in at 1.1 versus 0.3. I don't even know what to make of that. Wholesale trade sales. Some crazy volatility there. It was negative 0.6 last month. Anyway, wholesale trade inventory is just a smidge lower than expected. Again, I don't really see this as being a caddy. It doesn't really seem like the market cares either. I mean, I don't know that you can argue that one of these little nominal 1 minute candles is reacting to that. IWM's even up 0.5%. Oh, Palantir gave up. It's like 11.5% run. Still up 9.6. Still doing very, very well after that S&P inclusion talk. But anyway, here Tesla sits again. Once again at the 218 line. But now the trend is up. So 221 should be next if you can keep that trend going. Let's see. But it's back at that 218 line. Look at that. Trouble again at 218. All right. Oh, it's Rick's going to talk about it. Okay.
Sales up 1.1%. Now, this is a fresh number. We don't get trade sales in a mid-month. 1.1 is actually the second best read of 2024. We're at 2.02% in February of this year. Now, interest rates, short end, had a huge drop, of course, last week, and we see that the 2-10 spread is positive, and interest rates are all up just a bit. But the short-dated 2-year, 3-year, 5-year are still at very low levels based on history. We'll continue to monitor these because later in the week, CPI, PPI, some of the most important data points before the September meeting. Squawk on the street, of course, will continue. And we'll kick it back to you, Sarah.
Okay, we'll take it, Rick Santelli. Thank you very much. And good Monday morning, everyone. Welcome to another hour here of Squawk on the Street. I'm Sarah Eisen with David Faber, live from Post 9, as always, at the New York Stock Exchange. Carl has the morning off. Taking a look at stocks, a welcome rebound, at least from the bulls. The S&P up 1% right now. The NASDAQ up 1.2%. After last week's slide, where the S&P had its worst week since Silicon Valley Bank collapsed back in March 2023. What's working today?
That's wild. That's a wild comparison. Look at this. BTC, a little bit of a rollover. Not a big deal. Tesla, look at it. Just trying to break out. Nvidia's up 3%. Apple's almost fully recovered its slide there. So you had some bearishness for a moment. Look at that. Even ARM's recovered. Palantir back now to 10%. Oh, green candle there. Dell's still holding on to 5%. Amazon 2.2. Lone Depot up 4%. Hood, Robin the Hood, it's 1941. All right, look at that. Qs want to keep going. Slow little trend up. Oh yeah, you're gonna go to 221 now on Tesla. Look at that, 221. That's gonna be your line, and Qs keep going too. Yeah, probably about does it. I'm trying to think what, I mean, tomorrow you don't really have catalysts. I think today's catalysts were lame. Wednesday CPI, Thursday PPI, Friday University of Michigan sentiment. We're going to do some fundy analysis, probably some real estate analysis and some Let's see if we can pick a company and do a little bit of fundy analysis on it in the course live this morning, like we always do. So we'll hop over there after some more coffee. Apple event will be fun. Is it going to cause a super cycle? Probably not. Like, all the AI features they pitched last time, they haven't really released yet. I mean, some of them have been released on the betas, but most people don't use the betas. Kind of wild. All right. Somebody says Rivian is running. Ooh, let's see what Rivian has for us. Let's see here. Rivian. A couple percent. BTC still doing a little bit of the bear thing here. Come on, Tesla. You can break out at 218. Weird. Yeah, you did have a little bit of a run there on Rivian. Very, very... I mean, for the Qs to be moving this slowly today, I mean, that's like consolidation, pop-up, consolidation, pop-up, consolidation, now what? Ah, look at that. Can't get to 221. What a weird one. I don't know, that doesn't, like, it doesn't match the euphoria I feel like you would have on a bounce back Monday, just because it's so hard to hit those higher numbers. So just the enthusiasm to push these stocks higher feels a little limited right now, because they keep getting sold.
Wage growth over inflation. So it's not an all-out collapse. The question is just, they clearly better go fast. Would front-loading help ease the impact of some of these growth worries? Clearly that's
and there's different voices here. Who was it? Was it Dudley? Who's been very outspoken? Yeah.
Dudley said in July it's time to go.
Right.
So that feeds into the whole behind the curve if they were late. But even if they were late, just going 25 or just going 50, what kind of signal does that send? Is it going to hurt confidence? Is it going to feed into the bearish narrative that maybe the Fed's worried about a recession if they go 50? These are all things that they have to talk about.
Well, certainly one that a cut that would have taken place as there was talk some time back.
Yeah, but I'd rather have people talking about it and avoid it than guarantee it and not have people worried about it. Yeah, no.
The speech at Jackson Hole from Fed Chair Powell was important because he all but declared victory on inflation. So we'll still watch inflation because it is still above target, but there's no indications that it hasn't been heading back to target. What we're expecting this week is 2.3%, so a little bit higher than where they want it, and 0.2% increase over the month. The reason it's so important is because if it comes hotter than expected then that could raise questions about the 50, right? They're still going to want to be cautious that it goes all the way back down.
All right. Before we get to Mike and the markets, any charts you want to hit? Because I know you always come prepared.
Well, one thing I was looking at is Morgan Stanley did a survey of 2,000 consumers, and just because we're in election season, and they asked about top concerns. They've been doing this since pre-COVID, and the top concern is still inflation. 62% say that is their concern, and that really hasn't deviated as we've seen inflation rates come down, which I think is just a reminder that Americans aren't feeling the relief that we are seeing in these inflationary numbers because the cumulative impact of inflation is so high and groceries is such a big share of wallet purchase, and that's where the pain is. So it's a reminder as you hear, Vice President Kamala Harris talk about a federal ban on price gouging or former President Trump talk about lower gas prices. Like, this is the psyche of the American consumer, even if Wall Street has moved on to worry more about layoffs and the economic growth.
Yeah, that's an interesting point. All right, and that takes us to stocks as well. As you all know, coming off what were heavy losses last week, senior markets commentator Mike Santoli is here with us. Has a new market column looking at the state of stocks as we approach the second anniversary of the bull market.
Yeah, October is going to be 2 years if we consider that, the end of that 2022 bear market. And if you had told anybody pretty much then that at this moment in September of 2024, we would have both inflation and real GDP basically running between 2 and 3% annualized, which is where we are, you'd say, well, soft landing achieved. That's exactly what we're after. And the market, I think, is showing some misgivings about that, obviously, as Sarah's been saying, because we're very sensitive to the idea that we're losing momentum on the economy faster than we either hoped or expected. And it seems like there's this mismatch with where the Fed is being a little bit too cute and waiting, and the 2-year note yield being 1.5 percentage points below the Fed funds rate is the market's way of saying, get on with it. I don't know if
Okay, all right, it's time to go. Thank you, everybody, for watching. We'll have some more videos later in the day on the main channel. I appreciate your support. Love y'all, and good luck out there, whether you're trading or investing or speculating or YOLOing or I don't know what it is you're all doing. I hope you make money. So, let's go.
Gain the lead.
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you.
Come on,
this
Tesla!
Video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage the ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. The Russell today. Look at that. Nice little run on the Russie Russ today, huh? Come on, Tesla. Break that 218, would you? Too little volume. I mean, like, what's going on? I don't even think you could trade this anymore with how little movement you're getting here. You need like some anger. Where's the violence? Need violence. There's the violence. The Qs get the violence. Yes. Yes. Yes.